Investor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo, party. Yeah, I do see it's pretty light crew here this morning. Actually, a few people in the Hangout with us, or the Zoom call, I guess. So nice to see everybody. Happy Monday morning, TGIM. Probably a good idea to take it a bit slow on Mondays. And also, too, we're kind of in a holiday session right now. I would expect, with Christmas, Western holiday is basically 1 week from now. I do hear something thumping in the background. I don't know whether you got your microphone on or not, Chris, but just FYI, I can hear that. So usually they say the week prior to Christmas, and they thinking about, okay, what are holiday sales going to look like? Are they going to sell tons of the GI Joes with the Kung Fu grip and all that kind of stuff? We go into what they call sort of Santa Claus rally mode. People are generally in pretty good moods. And considering Christmas is next Monday, which will be obviously a holiday, and even Tuesday. I know Tuesday is like Boxing Day. Some of the European countries, that's actually a holiday as well. So I wouldn't be surprised if we're sort of entering into holiday mode here, if not fairly soon. Probably a really good testament to that is took the opening range trade here in crude this morning. Just because it's in my plan, it's what I'm supposed to do. And if I don't take the trade, then can't really record the data, and I can't say that I'm taking the trades religiously. And it was kind of a shit show here this morning. And probably a really good testament. Anybody does like to trade these opening range trades. A little bit of a piss off, but it's the way trading goes. We had the top end of the range, bottom end of the range. You can see we're bobbing and weaving. We got long, bobbing and weaving. They come down, take our stop out by like 1 or 2 ticks. How painful is that? And then the damn thing goes ripping higher into this sort of retail session, and you can see there was actually a pretty good trade there. So anyway, it's the way it goes. Live by the sword, die by the sword. Because of that, and actually you can also see where can I show you this? I want to show you off this screen. Anyway, this is a Hogue sort of weekly kickoff level, and I sim traded Hogue's level, especially with this beautiful double top, sort of countering the opening range trade, and it got stopped out too. So that's how my Monday morning went. I mean, I did book a $50-$60 loss on the opening range trade. This was a sim, so it wasn't really that big of a deal, but nonetheless booked a loss. So basically shut the trading platform down, and it kind of makes sense. I mean, this is a holiday environment. If anything, the journal entry should be, well, maybe you just cool your jets through the holiday environment. So anyway, that's been my morning here, this Monday morning in crude. Heading on over to the other markets I like to follow. Maybe we'll start off over here. And actually, it's funny how we're just basically hovering right at Hogue's level here. And finally, they put in a big fat top. It's an ugly top. I was thinking about shorting this, but just even risking to this high here meant 42 ticks, which is probably too much risk for a guy like me to consider taking. It is interesting. You can see my notes prior to starting the day. I always like to just sort of pull up levels and, sort of contemplate where I can buy and sell. And, that's Hogue's level. That was an ATR level. So it looks like this is a trade location. Hopefully, maybe another trade sets up here overnight or through tomorrow at this level, because I do like this level. Maybe we get one more pop up top to the moving average, and A, B, C, D objectives or something along those lines up top there. I don't know. Anyway, so holiday session, kind of wonky price action. That's your crude oil. Gold really haven't done a lot here this morning. Looking at the charts, I suppose you could argue big fat double top there coming in on the gold. So that means we probably should be thinking higher for crude. So I guess that does make sense. Chaos levels, interesting how 200 SMA lines up nicely with 2.618. So if you, and probably this is a nice bear A, B, C, D setting up, taking us back down into this area down here. Stock market. So if we pop on over to the stock market, you can see sort of Santa Claus in effect here. I might argue if I was drawing, actually, you can see we've got the bot levels here. Might suggest maybe conservative wise we go with something like that. You can see where the bot entry was off of this level. So that's just working away. It has broken the new highs here. I think Chris said that he was taking the opening range trade in the stock market and it fired along. Are you still in that trade, Chris? I don't know whether he is or not.
I am not. I got stopped out. I took profit at 1-1. Got stopped out at scratch on the meeting.
All right, well, better than kicking the pants, I suppose. Crude oil gave us nothing here today. Boo! Boo earns. Interesting to see. Tech stocks seem to be leading the charge. And I suppose we could probably take a quick boo, considering it is Monday. Yeah, we'll do that in the after party. This is just sort of an overview report here. Maybe in the after party, we'll take a look at some of the names in particular and see what they're doing. Broader market, interesting to see. We actually have a double bottom coming out of Monday on the US dollar index, which probably would explain the heaviness in the gold market. I think it was last week that we did sort of the correlation following. Oh, maybe it was it. Well, I think it was actually Friday that I did that. Anyway, dead cat bounce on the US dollar index off of the move stop to trailing level. So had somebody just said, there's a little W. I'm just getting the hell out of there, take profits. That's fine. You can even see that just in the short term, and this is probably going to play out through this sort of holiday session. This looks like a bull A, B, C, D, probably take us up into 4,669s, which is probably going to be nothing more than a kiss of this this original structural fail level. We might even rally all the way back up into our original Darth Maul fail level on the US dollar index. But it almost feels like we're in like a little bit of a lull here in the market. And the econs here coming out today, relatively light load. It wasn't a lot of information. We had one report come out of Canada. Let's see, is this updated? Let's refresh that. So here we are Monday. And Monday, very typical. Monday doesn't have a lot of econs. This is like everybody. I usually like to filter it down to like just the 2 stars and higher. So you can see there wasn't a heck of a lot. Business confidence over there in Germany kind of waned a bit. So the Europeans are feeling a little bit, if anything, I think I saw reports that natural gas prices are moving back up in Europe. Canada, we had new home sales, new housing price index actually down 0.2. Market was looking for 0.3 drop, so it actually came in a little stronger than expected. Of course, I've talked to you at length about the Canadian housing market and the stupidity of this place, and it's kind of sad. Canadians, if anything, they have a skillful art at just being the absolute worst investors ever. I was a broker through the dot-com boom, and the president and CEO of Nortel Networks, the largest company in Canada at the time, represented 35% of the entire stock market. If you ever see something like that, that's just got trap written all over it. But that's how stupid the Canadians get when they invest. I mean, it just idiocy. But anyway, same thing's happening this cycle. That was the dot-com boom. And then following, what was so sad is like day after day after day, the Nortel stock kept going down and down and down. And it never had any earnings. There was no reason for it to be as expensive as it was, other than the Canadians just blindly buy, and they have no logic to their investment thesis whatsoever. And I had retail customers, and I was a retail broker. I had to do what they wanted with their money, going in and buying at like 60, 55, 40, 30, 20, 10, and it's gone. So I mean, I don't think the housing market is going to go. So if anything, that's the one good difference between the stock market and greed cycles is potentially stocks just disappear. I don't think the houses are going to disappear, just like a lump of gold will never disappear. But could you see like 5, 10 years of just a slow grind lower of these housing prices? I could easily see that. Anyway, down in the States, interestingly enough, there was actually a fairly nice uptick. This isn't necessarily a comment on new housing, National Association of Housing Bureau. I don't know what B stands for. Housing Market Index, just the index itself. You can see it's United States, and we've talked about this quite a bit. The US market is actually already corrected quite a bit here. And there are some places like, Austin, Texas, and I saw reports that like people are like playing Nashville, Tennessee real estate, just the weirdest places. And all of those bubbles have completely popped, and the market's actually getting back to normal. So I mean, I wouldn't consider that a new bull market. If anything, maybe this thing just needs to stabilize a little bit. And why? I think the bottom line here is that we've been talking a little bit about this recently, but I get the distinct impression that actually this is not the chart I wanted to show you. These are the bond prices. I mean, we could look at the yields, the exact opposite. But if we look at bond prices, what we should be seeing, and actually there is sort of your short-term interest rate proxy, the 2-year bond in the marketplace. It's basically parked itself in a trading range now. And if anything, 10 years, 30 years, you can see there's been a bit of an uptick here. What is that? That low was the end of October there, and basically the whole market pivoted back up. Stocks have been going just straight up, as the bonds have been all going basically straight up. It's not that big of an image. There you go. That's probably a little better for you. So this is why things like the housing market are stabilizing. Is it looks like interest rates are they have been enjoying a fairly nice reprieve. And I have another matrix on here. I just don't know whether I can load it in time for you guys. Yeah, what the hell do we call it? I can't even remember now. Yeah, fudge. Actually, here is stock market breadth. The mortgage rates down in the States are starting to stabilize as well. I still think it's a bit early to really call a top or bottom in these markets yet, but this is the exact opposite image of those bonds. These are the yields, and yields should move the exact opposite to bond prices. And you can see, I mean, it's been a pretty one-directional move here. I've said repeatedly that I don't think that this is a top until you actually see a big fat M and the market is smiling at you. I would just say for the short term, this has got, and like I said there a moment ago, this was basically that October pivot. And, the whole stock market, the breadth indicators on this site for the stock market, everything just turned back up as soon as these bond prices topped and started to come back down. It is interesting, and maybe I'll do this in the after party. I've had a lot of sort of people sort of, contemplating, and I suppose if you're looking at housing, right, there's the big shock. And if anything, if you're watching this for the first time, right, that's what literally was the catalyst that carved out the change that we're going through in our society right now, with regard to like interest rates and housing. You can see there is the 2008 financial crisis, where, and basically mortgage rates, everything, the whole economy collapsed. There is a pretty sizable bottom right through that Jupiter Saturn cross event. Of course, the whole sickness and stuff was labeled as a big driver of that. And then sadly, the socialists just went absolutely crazy in our society, and they just spent money like drunken whores, which is such a shame because that is the inflation world that we live in. And like I love using this, and I teach this in our education program, that this relationship between the TIPS and the TLTs, the two different types of government bonds, one has an inflation protection component, one doesn't. Again, there is that bottom right through the Jupiter Saturn cross event and the whole sickness and insurrection. And we'll remember that for the rest of our lives, I suppose. And the socialists all came piling into power with their silly little face masks on and the whole bit. And I don't know whether that's actually done. What I will say here, though, and actually this is probably a good sort of illustration of momentum, is you can see how really powerful that move was there. Then you notice that the next move, right, if we sort of measure the whole thing, the next move was from here to here, not nearly as big. And then notice this move now is from here to here. So you can quite literally see the magnitude of the moves is waning. Like if I was one of those trader guys, if this happened to be a location, and I think you could make the argument that we are coming back up against previous pivot highs and lows. Ideally we want to sell against highs and buy against lows. So it's not a terrible location. Then you would look for your indicator confirmation. Unfortunately, this is off a matrix where I have a whole bunch of different charts, so I can't really show you momentum. Maybe I could do that over here. What the hell? TLT minus TIP. I think that's how I did it. TIP minus, got it backwards. TIP minus TLT. There we go. So up against previous highs. Actually, you can see this goes, well, actually, that's not bad. It goes. And yeah, there's the momentum picture. So really big push here. Actually, yeah. Little bit of a less of a push here. You can already start to see the MACD peaks are getting less. Then, especially off of this high, like these highs on the MACD here are 214. Here, well, is that right? Okay, so it looks like that was actually a little bit higher, 230. This one's substantially lower. This one here, do we get 230? No, I don't even see that. You know what? I don't think this is measuring what I'm thinking it's measuring. 220. Anyway, you can see the lower highs here, and you can see the lower lows. So the momentum on this inflation problem is waning. And I think this is basically what the Fed saw here recently. Notice this M right here, that M right there, that M right there, with Willie being stupid. Actually, it'd be curious if anybody actually watching this video today even knows, but this is a setup that we actually have on the site and that we screen for on a daily basis. And it's one of our guys that took the education program years ago. He's very famous in the crypto space, and I'm not quite sure if he even trades this setup anymore, but we named it after him because he really liked it. And when he did trade this, he did very, very well. Yep, that's right, Eddie. Well, I mean, yeah, you could have a minimum price, but what, and maybe this might be a little bit advanced for a guy like Dav, who knows? But what 3-bar pattern is this? And actually, it's I bark at you guys all the time about this. Boom, boom, boom. What does that 3-bar pattern look like? Yep, actually, yeah, it's valid. Do you know what that? Hey, there you go, Daddy. So I think you can make the argument. Actually, there was actually a pretty good trade setup there. Very good, Kevin. Excellent. Good for you. Very good, Constantine. So, yeah, the regulars who watch these videos, I mean, I hope you can see a lot of this is incredibly cliche, and it's what we do day in, day out. So, anyway, I think you can make the argument that based on momentum here and the fact that we were working these massive divergences and Willie was stupid, I think we actually got a break in the momentum picture there in the inflation problem. So that's probably one of the things that the Fed is probably feeling a little bit better about. And you've sort of heard, of late that they're basically pivoting the dot plot and all that kind of fun stuff. So, and it is interesting if you listen to the public, of course, that they all think that the world's about to end here tomorrow. So, if anything, the public is usually wrong. So, anyway. You can see there is the gee whiz, and it's coming out of the Nasdaq. It's just going parabolic here. So you can see Santa Claus looks like he's waking up there in Techland. Is everybody anticipating all the fun toys that they're going to get in their stockings and stuff? Actually, I got Christmas came early for me. TRI bought me a Christmas gift in the tech space, so I'm sure I'm probably not alone. And you saw that the GDP numbers there that were put out by the Americans. I don't know, I guess it was about 2 or 3 weeks ago. 5% annualized growth. Oh my goodness. Um, those kind of numbers. People have got some money in their pockets. The economy is just booming along here. So not a big surprise to see money pouring into the space. A couple of interesting things I noted, and like I said, maybe we'll talk about it in the after party. But I am hearing talk that the electric vehicle industry could be in pretty big trouble in 2024. So I am curious to see how that is. We should probably circle around in the after party and take a look at them. All right. So is there anything else? So that was on my mind over the weekend. I didn't talk about it in the broiler chicken show, but it does explain why the stock market's feeling better. And if anything, this should be a reprieve for the housing market. Down in the States, who knows what the hell's gonna happen. I mean, China does so fucked right now. It's probably China does gonna maybe just go sideways for a year or two up here. Because I could see very easily seeing what happened in the 1980s was that the oil market broke in 1986, and that sort of set up sort of Canada and all the commodity countries version of what you saw in 2008 down in the States. And I do think that would make a lot of sense. In 1991 was an absolute train wreck of a recession for Canada. And the government had to completely restructure itself and killed all the transfer payments and stuff to the provinces in the early 1990s because of that horrific recession. I wouldn't be surprised if we have to go through something similar like that. I mean, circling on back over to crypto, as you can kind of see, and we spent most of the actual video yesterday, the broiler chicken show, just talking primarily about crypto, where we are in this sort of higher time frame weekly basis. I still think that really the odds of us either going up into this big fat round number 50 G's, mountain man, horizontal support and resistance against this empire top, or going down into Cullen and the pump chaser zone, 38.2, Ray Burchett, first stop targets, all that kind of talk, trend line support, moving average support. I really think that this is a coin toss. And unfortunately, when it comes to investing, coin tosses are not really the best bets to take. We ideally would like to see the setups that we trade be a little bit more than 50% odds in our favor. Although I tell you, this opening range trade that I committed to taking this past a couple quarters, it looks like it's running at best 50%. But anyway, um, not to get distracted, sorry. Point here is I think the risks are basically evenly skewed. Uh, and my general message to everybody is if you're long and you bought down in reload zones, not a bad idea to maybe let them have some. A lot of the altcoins basically have doubled and tripled off of their bottoms and stuff. So not a bad idea. See a lot of TRIers. In fact, I was so proud. Came back after I took a bit of a break following getting punched in the nose in crude this morning. But came back to the lounge to messages like this person. I won't name names because we don't really want to make people feel uncomfortable, but this is just absolutely exactly why I do all this. And the person here said, oh, this was a great commentary, and it's exactly why we do this. So just want to let you know that I recently hit doubles on ILV, Link, ICP, POLS, XVS, Alpha. Geez, this guy sounds like Eddie. Using that LOL strategy. Thanks, everyone. You are all making a positive difference in this world. Love to hear that. I mean, that's the whole reason why I'm still alive. With your knowledge, wish you a great week. I mean, what a beautiful commentary to come into the lounge and see people are just kicking it here. But the problem is that, and just as this person's even saying, that, in the POLS, I got off a double on that. So actually, I can say, hey, I joined you on that trade. But you can't be buying these names up here. We're selling. We're taking profits on these names up here. Same thing with Bitcoin. I can't, come in on the buy side here. If I did buy this W, I should be selling halves on doubles and going out and hookers and blow on the Beamish this weekend. Well, wait, what? No, I don't do those kind of things. Anyway, so, that's the message that I conveyed yesterday. I spent a lot of time talking about location, indicator confirmation, price structure. I don't think we really have a short per se just yet. What I think is the market, first and foremost, and we talked about this at length yesterday, but let's just take a look. Let's see what happened. Has this now confirmed? Does that look like a confirmed bearish divergence? Well, only two. I'm gonna get stopped out. So, I mean, the point here is now remember yesterday when we were talking about this, it was just a question of did we actually confirm? We actually confirmed this on Saturday. Sunday, yesterday, more confirmation. Monday, oh, even more confirmation. Good heavens. Oh, geez. Geez, Louise. So we definitely have indicator confirmation, and you all know what this message means. It doesn't necessarily mean that actually price is going to go down. I would say though that if you were like swimming with the tide or against the tide, if you're long and you're hunting longs and you're getting long in here, as long as this image looks like this, I think you're swimming against the tide. You're sailing into the wind. Now, if you're really good at tacking and jibing, great, you can sail into the wind all day long. It takes forever to get anywhere, but nonetheless, you can. So I guess the way that I'm looking at this is just, do we really want to be buyers of Bitcoin up top here? I don't think so. If you want to trade lower time frame setups, okay, fine. And obviously that comes with all of its cautionary tales, and you better understand risk management and obey stops and stuff. And so that's kind of what this image is. Now on the 4-hour reload zones, failures at reload zones, market coming back off. Interesting how overnight we came down into these lows. Really good anecdote. You've probably heard me say things like candle body lows for trade location. So you got that candle body low, and I think you could actually make the argument off of this low. That's what all these tails are. Gave you those kick-ass fills in there. And then this overnight, I think you could probably even draw off of that candle body low right there. And of course, gave you kick-ass fills down in there. So I could understand that the range traders are going to come in and they're going to buy against these lows. It's a tricky trade because, by all means, if we lose these lows, you better get the hell out of there. Not for the faint of heart. And, as I said, investors, higher time frame players, you're probably best, and especially like new people do investing and trading, probably best to leave this creature alone right now. That's a very advanced trade there. Having said that, you can see a nice tail. You could even argue that's a nice hammer bottom. And now we're starting to climb the wall of worry again. Based off of just these 3-bar fractals, you can see the bear took over, the bull heading out of Friday and into Saturday took over, then the bear took over. We've been working our way down. We'd actually have to move through this candle high here for us to see if the bull is actually going to take over. And of course, that would be an absolutely horrible trade location. But I could very easily see if we do trade up through that high, that we could say that the bull is back in charge of this market. I think it's still dead cat bouncy. But having said that, like I said, guys that would come in and buy against the bottom end of the range, that does make sense. But this is very, very advanced trading, not for the light of heart. I think I heard Chris say that our time's just about up, so I'll basically finish this video off with you could make the argument 1 low, 2 lows. This low, maybe a bit suspect. If you were aggressive and you just said, look at, I just trade bots, so I'm long now, you would see that, yes, we took out this low. And like we said there this morning, counterbody lows for trade location. I don't even think they actually even took out this second low yet, but now you've got 1 low, 2 lows, 3 lows. If this thing can basically W out through this level, that's going to be pretty sexy. So, for the traders out there, keep an eye out for that bond. Live by the sword, die by the sword. You never really know what's going to happen in this game. And of course, there are other bot. Geez, I sure love the look of this come Inu. And actually, one thing I did notice here recently is when these funny meme coins and stuff, when they actually start bottoming, notice he's right off at 78.6 here. It's not really the best looking W yet. If anything, maybe an inverted head and shoulders, which means we're probably just going to stall out somewhere up in here. But when I notice that these meme coins start to bottom, that's actually a sign that maybe the bigger market, the broader market, may need to take a bit of a pause. But like there were other bot setups that were working away. And if you're a bot trader, you just got to, take the trade setups, live with the results. So here's link setup, same sort of thing. 1 low, 2 lows, 3 lows. We're going to wash these recent lows here. Trade is underwater right now, but nothing really has changed. If Bitcoin goes and pukes out through those lows, I would imagine this link will puke out through its lows. And also too, I noticed like the Matic, he was backing off here a bit. Same sort of thing. 1 low, 2 low, 3 lows. So took out one of the lows here, but just basically sitting there treading water. So interesting how you can see, the bear divs come in on Bitcoin, looking a bit heavy, failed in its reload zone, coming back down against the lows. Are you going to see in like these kind of names, candle body lows for trade location, these things start to pivot once we get down against these lows? Could be. And if we lose those lows, and the same thing on the Bitcoin, if we go through these lows, then you just got to walk away and just leave this whole thing alone. So we're right on edge here with crypto. I don't know which way it's going to go, and I don't think it's a good idea to get into the business of predicting what's going to happen. You just identify the setups that you like to work with and just trade the setups. Live with the results. Actually, interesting to see Sjord's FA names kind of looking a little soft here a bit. So maybe they need to calm down here a bit. Even the one name that's up is really just a dead cat bounce off of a tag of moving average support. So it looks to me like crypto's a bit heavy here. And I think the bear still has the ball. But we'll see. Like I said, and if you want to use Bitcoin probably as a proxy, this thing can actually start spitting out W's down in here, then we're back on the bull side. But for the time being, I think the Bears got the ball, and it's on the onus of the bull to actually step up and take control again. So, never know. Maybe through tomorrow's video, the rest of today's price action, we might see that bottom come in. For the time being, I think, yeah, the best, what do they say? The best part of valor is a big old fat whack of caution. So there's sort of your market summary for right out of the gate. First thing Monday morning, it is a holiday season. So be very careful on trading things like opening range trades and sort of your mechanical trades that would work under sort of, normal market state. Right now, I think we're in very unique holiday type session. So I see things like that crude oil opening range trade getting stopped out and flushed just because the volumes are very light because we're in this holiday session. So just be careful with your money, folks. All right, I think I'm going to leave the free video at that. We'll pop on over in the after party, maybe look a little bit at the dashboard, see what kind of information that it's given us here to work with. Slow and steady wins the race. Don't take no win nickels. Remember what your number one job is. All the best and a big bye for now.